Hello folks, and welcome back to another exciting episode. In this video, we want to learn all about how to take advantage of internal structures to take high probability trade setups. Now, before you can understand how to use your internal structures to take high probability trades, the first thing you need to do is to map out your structures in the market. Market structure is the cornerstone of the market, so you need to understand that perfectly. Number two thing you need to do is you need to identify your trading range. Okay? Once you have identified your trading range, then you can understand which one is your internal structures and which one is your external structures. There are two advanced structures advanced liquidity in the market. You have external range liquidity and then you have internal range liquidity. It is that internal range liquidity that we are trying to capitalize on to take high probability trade setups. How do you do that? I'm going to show you all of that in this video. Now, but first of all, let's map the structure before us. As you can see, all right, we're pretty much bearish, but let's see the structures first of all. Now, the first thing we need to understand is that if price for a low or high to be confirmed, inducement has to be taken. All right, and as you can see, this low, it has taken out this inducement to confirm this low as a valid low. So that's our low in the market. Now, for this high to be confirmed as a valid high, it has to take out major structure. It has to take out major structure low, and which is here. This major structure low has to be taken out. And how do we do that? Well, simple. This is our major structure low here. Price has to close below it for your high or lower high in a downtrend to be confirmed as a lower high. And as you can see, that happened there, and that is known as break of structure, all right, to confirm this high. All right, so this high is confirmed. So when you confirm the high, you continue to track the market just the way we have done now. All right, so high is confirmed, and so where is your next low? Just a minute, guys. So where is your low now in the market? Well, as you can see, price took this structure low out. That's a break of structure and formed this low. This low is invalid because it didn't take out any liquidity, and then it created a new low. For this new low to be confirmed as a valid low, it has to take out it has to take out inducement. And where is your inducement in the market? Well, this is your inducement, all right, to confirm this low. All right, so this low is now confirmed. So this low is now confirmed as our lower low. Okay, so that's our lower low in the market, and we continue. Okay, now price went up. Now take note of this. This is your range high, this is your range low. Very important for you to understand. You know, remember I told you the first thing is to map the structure, and we have done that now. This is our low, lower high, lower low. All right, the second thing I told you that you need to do in the market is to identify your trading range. Now, this is your range high, this is your range low. Remember, this is major structure. Let me just indicate that by using horizontal line to make it a bit clearer to you. All right, so this is your range high, and where is your range low? Well, this is your range low in the market. All right, as simple as that. Range high, range low. All right, so this is, remember our previous our last video was on strong lows, weak highs, and strong highs, weak lows. Now in this case, this is very structured. We are now having strong highs and weak lows. All right, so expectational order flow is for price to come and take this low out, but we are not expecting price to go and take out this high and close above it. All right, we are not expecting that to happen. Okay, now so this is your major structure. Major structure high, major structure low. Everything that you find within this high, this structure high, structure low, is what is known as internal structures. So we want to find a way of capitalizing on these internal structures to to take trades, either counter trend trade or pro trend trade. Simple. But as a beginner, I will advise you that you forget about the counter trend trade for now until you gain some degree of experience. What I need you to concentrate on is on the pro trend. All right. So how are you going to capitalize on it, either for counter trend trade or the pro trend trade? All right. Now remember, this is your trading range, so we are not expecting price to come and break this major structure high. This is a strong high, or if you like, protected high. It's protected already. All right. So now you want to take price higher to the extreme point of this your trading range. All right, because that's where you can find high probability point of interest. Now let's assume your point of interest is somewhere here. All right, and so what you want to do is, after taking out inducement, you want to capitalize on it and take trade higher. Now you can do that. After taking out inducement, you want to wait for inducement to be taken. All right. All right. Inducement is taken here, for instance. I'm just showing you, but this is a counter trend, and I don't want you to trade the counter trend. All right, but I'm just showing you as an example. So inducement is taken out. If it wicks below this inducement, then you can use TNCP to take price higher. Or if it closes up below this inducement, then you can wait for any OB, all right, to take it higher to this point of interest. All right, I'm just showing you as an example. Okay, now that's a counter trend trade. Now, but for the pro trend, now price tap into your point of interest here. All right, the extreme point of interest, which is high probability point of interest. Now, how do you capitalize on it to take trade lower until this point, this major structure low here? Now, remember, everything you'll find within here is going to be internal structure. The main structure is between this high and this low. All right, every other thing inside is just internal structure. And therefore, as you can see, price took out, when it tapped on this point of interest, it now took out this low here. This low here is known as chop. Why? Because it tapped on this point of interest. All right, so this is chop, and you need to wait for inducement, and inducement is here. All right, I'm just showing that to you. I'm making an example for you to understand what we're talking about. So inducement is here. All right, so after that inducement, you can decide to take your trade after inducement. Perhaps you could find a point of interest somewhere here, and then you can take your trade from there. All right, now, but remember, this is internal structure. Your main structure is this one. This is your external liquidity. You want to take price to come and take out this external liquidity. I'm showing you how you can capitalize on that to take price to come and take out this internal liquidity. Because if you must wait for it to come and break this major structure low before you begin to look for trading opportunity or trade opportunities, you may not have a lot of trades in the market to enter. That's why I'm showing you this. Okay, so it taps on something there and drops, and so that is how you continue to take pro trend trade till this point of interest. Till this major structure low here. This is your weak low here. Okay, now let me quickly show you on the chart. Maybe you will understand better as we go to the chart. Now take a look at this chart. Take a look at this. This is a low in the market. As you can see, we are pretty much bearish. Let me zoom out again for you to see that we are bearish. Can you see that? We are pretty much bearish. All right. So this becomes your low. This one is your low in the market. Why? Because it took out inducement. I've told you, low or high cannot be confirmed until inducement is taken. So that's your inducement taken out of the market to confirm that low. All right. So after that low is confirmed, okay, price went up. For this high to be confirmed as a lower high, it has to take out this major structure low here. It has to take it out, all right, and close below it. And as you can see, that happened there. So this becomes your break of structure. Okay, that's your break of structure in the market, confirming this high as your valid high in the market. Okay, so this is your high in the market. All right, now After then, price printed this low. This low cannot be confirmed just yet until it takes out inducement. And where is your inducement in the market here? Well, remember this one. I think let's look at this carefully. Let's look at this one very carefully. All right. So this is your inducement in the market. This one. So this becomes your inducement. This becomes your inducement in the market, guys. Just a minute, guys. My internet is lacking. So this becomes your inducement in the market. All right, to confirm this low. So this low is confirmed. Simple. This is your low in the market. Now, you now have a trading range. All right, high, low. Remember I told you, you need to identify your trading range. We have marked the structure as the first thing like I told you about. And now this is our trading range. Range high, and where is your range low? Range low is here. As simple. Very important for you to understand this. I will advise you as a beginner to do this so that you don't mix up yourself in the market. All right. So this is your range high. This is your range low. Now, after inducement, remember we have only 2 points of interest within your trading range. We have your DOB and we have your extreme OB. Extreme OB is high probability, DOB is low probability. Now, but remember again, the strongest point of interest that you can talk about in the market is your order flow. Order flow is more important than order block. All right. So where is your order flow here? Well, this is your order flow after this inducement, but it has already been mitigated, so we cannot use that. All right. Now we have another order flow here. Where is your order flow? Well, look at this. Price came down, went back up before coming back down. Now this is your order flow in the market. Simple. Let me show that to you. This is the low of this candle to the high, and that also serves as your point of view, as your OB, but price didn't come to tap into it. All right, and which is very fine, no problems. So there was no trade opportunity there. Price didn't tap into it, so we continue. All right. Well, if you go to the lower time frame, you may have something that price tap into here. All right. But on this higher time frame, you can do this on any time frame. It doesn't matter whether it is weekly time frame, daily time frame, 4H, 1H, 15M, 5M, 1M. It doesn't really matter. It's the same process that you follow. Simple. So now there was no trade setup for us here. No problem. We continue. Price broke structure here. This becomes your break of structure. It took it out with the candle wick, but eventually it closed below it. So this becomes your BOS in the market. Simple. All right. So after that, where is your low? Where is your low here in the market that you can capitalize on to take trades? So where is your low? This is a low. For this low to be confirmed, inducement has to be taken. And where is your inducement? Inducement is here, guys. And he didn't take it out. And then he created this low. For this low to be confirmed as a valid low, it has to take out inducement. Well, this is minor inducement here. All right. And this is your major inducement. And I want to go for the major inducement here. All right. This is your major inducement. So that's your inducement. Taken out. All right. So when it is taken out, that's confirmed that low as a valid low. All right. So let's mark that as our valid low. So that's your low in the market. It's as simple as that, guys. You don't need to complicate anything. So now, where is your trading range? We have a new trading range. Where is it? Now remember, when it took out break structure here, this is your high. All right. This is your valid high. We didn't mark that one, so we need to mark that as your valid high. This becomes your valid high. All right. That's your valid high. Why? because this low is confirmed when it took out inducement, and this high cannot be confirmed just yet until price comes down to take out this low, and it has done that. So that's your high in the market. All right, so that's your range high, this is your range low. All right, and then price started rotating back up. This is counter trend trade. If you want to trade this one as a beginner, like I said, I don't advise you to do it. All right, wait for a counter trend trade until you gain experience. Okay, but before we continue, if you are interested in being part of our VIP community, we are opening our doors for registration for January intake. Registration is ongoing. It started since on the 15th of this month and is going to end on the 30th of this month. So if you're interested, please take advantage of it. I will leave the link in the description. We have reduced our mentorship fee so ridiculously. You can take advantage of that opportunity, because immediately after the 30th of January, we are going to revert to our normal mentorship fee. So take advantage of that. All right, guys, let's continue with what we are discussing. So now, where is your OB? Well, before we get to the issue of OB here, now I omitted something here. Now, when price took out this structure low here and closed below it, now the new high, the new low is here, all right? And this low is confirmed when it took out inducement, all right? So this becomes our new low in the market. Let me identify that one quickly before we go further. So this is our new low in the market. Why? It took out inducement, all right? Let me change the color too. It took out inducement, so that's our new low. Now, after that new low, price went up. For this high to be confirmed as a valid high, price has to come down to take out this low, all right? And close below it, because this is a major structure low here, all right? And as you can see, did that happen? Well, it took it out with a candle wick initially, but eventually it closed, I think, eventually it closed below it, okay? And that is our new break of structure, simple. That's our new break of structure. And so this high is now confirmed as a valid high, okay? So this high is confirmed as a valid high, all right? Remember that. That's our valid high, okay? And now price rotated down to create this new low, all right? So for this new low to be confirmed, it has to take out inducement. And where is the inducement here? All right? Where is the inducement here? Well, take a look at this. You can mark this as your inducement, but I prefer to mark this one. But this is actually your inducement. Let me show that to you. Take a look at this price. Let me show you what happened here so that you can understand. There's price came from top here, printed this low here. All right, where is it? He printed this low, went back up, printed this high, and came back down. All right, and then went back up to take out this high here. All right, I hope you understand what we're trying to say. So this becomes your inducement. Your inducement is here. So this actually is your inducement in the market, guys. I like you to understand that very well. This is your inducement. This one, where is it? This is your inducement. That's your inducement in the market. All right, so you took out that inducement to confirm this low. Okay, so after inducement, what do you have? Well, you have your order flow or your OB. And where is your order flow here? Well, this becomes your order flow. The first thing is your order flow. If the order flow is mitigated, then you look for the OB. All right, very, very important for us to understand that. This is the low. All right, price went up. Take out this high. So this is your order flow in the market. This one. If price has mitigated it, then we look for another one. And as you can see, price did not mitigate it. All right, but it's too large. For you to reduce it, you now look for an OB. And this is still the OB and it's still too large. But however, price reacted off of it. This is your DOB. And where is your extreme OB? Remember, this is your DOB. This is your high and this is your low. Major high and low. And so therefore, this is your extreme OB here. This is your extreme OB. All right? You don't want to take order flow because order flow is already mitigated. So this is your extreme OB. Take note of it. This is your extreme OB. And if you drag it out, all right, look at what happened there. Okay? Look at what happened here. Price wicked above this OB. This is not break of structure. All right? This is simply liquidity grab. Liquidity has been taken from this high. Can you see that? Now, this OB is still valid. What you see here is still valid. All right? It's just that if you want to mark the structure of the market, this is not a break of structure. This is simply liquidity grab. And whenever this happens like this, what do? You transfer this high. All right? You will need to transfer this high. Just a minute. You need to transfer. What? Sorry, guys. You need to transfer this high to this point. This becomes your new high. All right? Because why? Liquidity has already been taken from this high. So this high, just a minute. So liquidity has already been taken from this high. So this becomes your new high in the market. You transfer this high to this point. And then your low too. This low here is also transferred to this point. To this low here. Alright? It's also transferred. It's no more valid here. This low is no more valid. Everything is transferred. Everything is transferred. I want you to understand that. So actually, where is your structure now? Let's see the structure of the market. The structure of the market is this is your high, this is your low. All right. Now this high cannot be confirmed just yet until price rotates back down to take out this low, major structure low, and close below it. All right. And as you can see, that has not happened. That has not happened. We have our range low and our range high here, so we cannot mark this just yet. Until price, we cannot label it just yet until price takes out this major structure low here. Now remember, this is your major structure high, major structure low. This is your trading range. Everything you find here is internal structure, and therefore we want to see how we can capitalize on this internal structure to take price lower to this point. This is our weak low and it has to come down to take it out, but this is our strong high. We don't expect price to go and take out this strong high and close above it. If that happens, that becomes a change of character. All right? Everything you find here is internal structure. And how do we capitalize on this internal structure here? This is where I want to show you how to capitalize on it. Remember, we are bearish. All right? Now, let's begin to look at internal structures from here now. Okay, so now, take a look. Price came into this point of interest, this OB. All right? Even though it wicked above it, this OB is still valid, like I said. Now, after it wicked above it, look at what happened. It printed this high and came down to print this low before going back higher to take out this high with candle wicks or candle wicks. All right? Now, where is, because it has tapped into a point of interest, this now becomes your chalk in the market, guys. Simple. This becomes your chalk. As simple. That's your chalk in the market. All right? Now, after that chalk, okay, because it has already taken liquidity here, you don't need to wait for inducement again. So, where is your point of interest here? Well, remember I told you, your order flow is more important than your order block. All right? Order block is just a refined version of order flow. Now this is your order flow in the market, and as you can see, price tap into that order flow several times and drop. So if you want to take your trade from here, put your trade here as being a sell trade, all right, and this would have been your trade in the market, guys. Where would be your target? Your target will be this low, your major structure low, where your target first of all will come to this low, you move your stop loss to break even, but your ultimate target is this low here, this major structure low here. That's your ultimate target here. Okay, I want you to understand that. That's your ultimate target. That's the first trade you would have taken on the internal structure. That is, remember, this is internal structure. So this is internal structure high here. Let me show that to you. This is your internal structure high. I want to change that color for you to understand what we're talking about. That's your internal structure high. Okay, and price took out this chalk here to form this low, but this low didn't take out any inducement, so we cannot confirm this low as a valid low. Now after that, price took out this low and printed a new low here. For this new low to be confirmed as a valid low, it has to take out inducement, and as you can see, it didn't take out any inducement. All right, and then price eventually printed this low and took out inducement after this low. Take a look at it. After this low, inducement is here. This is your inducement in the market, correct? Yes, correct. This is your inducement in the market, and as you can see, price took it out. Let's confirm, let's label that as our inducement. Price has taken out that inducement. Okay, when it took out that inducement is to confirm this low as a valid low. I mean this low. All right, is that correct? No, it's to confirm this low as a valid low. Okay, look at. Yeah, it's to confirm this low as a valid low. So this is your internal structure low here. We need to understand this very perfectly, very, very well. We need to understand it very, very well. This is your internal structure low here. Please take note. This is your internal structure low there. All right? Why? Price has gone up to take out inducement here. Okay? And now for this your new high to be confirmed. Remember, when it took out inducement, where did price go to? Price traveled to this order flow here. So you could have taken advantage of this order flow. This is your order flow here, from here. From this low to this high is your order flow. All right? Remember, that is your DOB. Okay? Let me see. Okay, didn't mark out the order flow well. Okay, so that's your order flow in the market. So price took out inducement, tapped on that order flow, and dropped. Do you see that? So this is your low, and for your lower high, this lower high to be confirmed, or this one to be confirmed, it has to take out this major structure low here, this internal structure low with a candle closure. And as you can see, that happened here. Simple. It happened here. Because you need to understand this. It happened there. So this becomes your break of structure, but internal break of structure. I want you to understand this thing. This becomes your break of structure. Okay? This is your low. And where is the high? Well, the high is here, because it has now taken out structure. This is your internal structure high. Okay? That's your internal structure high. So you could have taken advantage of this order flow to enter the market down. To where? To this point. This would have been your entry opportunity. Alright? Where will you target? You target this low here. As simple. Simple. You target that low. So that's your trade setup. Simple. Okay? Now, price printed this new low here. For this new low, this new low to be confirmed. Remember, price came down, went up, and came back down to take out this low. So your inducement is here. This is your inducement in the market. Your inducement is here. Minor inducement, that is. Okay? And it has been taken out. To confirm this low, internal structure low, remember that. All these are internal structure low. Sorry guys. This is your internal structure low here. I'm showing you how you can capitalize on your internal structures to take advantage of it and make money. Now, remember, this is your high, your low, lower high, lower low. Alright? Now, when you mark this your lower low because you took out this inducement here, where is your OB that you would have marked? You would have marked this OB here, this one. This is your valid OB here. Why? Because your order flow has already been mitigated. So this is your valid OB. And price came there, tap into it, alright? Gave a little reaction or no reaction at all, and blew through it. So this would have been a loss. If you place a trade here and enter directly, it would have been a loss. It broke through this major structure high, internal structure high, and close above it. Once that happens, that becomes chop. This one becomes chop. Change of character here. Change of character. So what do we want to do here? We want to now start looking for buy opportunity. Why? Internal structure has shifted from being bearish to bullish. Okay? Now, it printed this high. For this high to be confirmed, inducement has to be taken. And as you can see, where is the inducement here, guys? Well, the inducement here is this point. Is this point. This your major internal structure low is your inducement. Okay? And as you can see, price rotated back down to take out this inducement. Some people will think that this is a change of character. It's not. This is not another change of character. This is just simply inducement. Alright? This is simply inducement. So this your low here is no more valid. Alright? This serves as inducement. Because there is no inducement on this leg other than here. Correct? Correct. So we are still bullish. So this high is confirmed when we took out inducement. So we now place a label there that this is our high. Because it has already taken out inducement. Okay? So when it took out that inducement, what happened? Let's see what happened here. Price, this is your high. So this your major structure is transferred from here. It's no more valid here. This is your major structure. It's no more valid here, guys. Simple. It's no more valid there. So where is it valid now? This is your high. Remember, your internal structure is still this one. Alright? Low, lower high, lower low. Now high here. So this is supposed to be your low, but this is an inducement. Alright? So it printed a high. So where is the low here that will confirm that high? It printed this low. It didn't take out inducement. This would have been your inducement. It didn't take it out. Did it? It didn't take out that inducement. I don't think it took it out. Let me see. I want to be sure. It didn't take out inducement. It's just it's equal highs. It didn't take out that inducement. Alright? And before you know it printed this low. For this low to be confirmed, it has to take out inducement. It didn't take it out. And another low is printed. For this low to be confirmed, it has to take out the inducement. It didn't. Another low is printed. It has to take out the inducement. Did it? It didn't. Alright? And a new low here is now printed. Where is the inducement? The inducement is here, guys. This is your inducement in the market. To confirm this low, this one. This is inducement. Alright? Sorry. This is inducement. So for that low to be confirmed, and as you can see, inducement has been taken. So that low, internal structure low, that is confirmed. All right. So after taking out that low, remember this is still your high. Your high is still protected here. Take a look at it. This your high is still there. This high is a weak high and has to be taken out. All right. If this uptrend, if this internal structure uptrend is to continue, all right. So that is your high, and this is your low. This your low is protected. Internal structure low is protected. Price has to come and take out this high. So we are waiting for it to come and take out this high. It traveled back up, but they didn't take it out. And now price is rotating back down. All right. When it rotated back down, where is your inducement in the market? Well, your inducement can be here. This is your inducement in the market. So we are waiting for price to take out that inducement, for price to go up and take out this structure high. All right. Take it out, because we are bullish. But essentially, this is your major structure in the market. I want you to understand. Take a look at this, your major structure. This is your major structure. Structure high, structure low. These are your two major structures in the market. I want you to understand that. This is your major structure high, major structure low. Everything inside is internal structure, and we are capitalizing on this internal structure. At least we've gotten 2 trades now from this internal structure. All right, we've gotten 2 trades instead of waiting for it to come and take out this low. All right, this major structure low, before we start looking for opportunities to enter the market. You can take advantage of these internal structures, all right, to make money for yourself. As simple. As simple. All you need to do is to identify your major high and your major low. Simple. Everything inside of your major high and major low, they are internal structures. You can take advantage of it. I hope you understand. I hope this video is helpful. Please go back and watch this video again and again. It will really increase your win rate in the market if you can master how to take advantage of your internal structures to enter high probability trades. Okay, this is where we are going to draw the curtain for today's video. But if you have any questions, if there is any question bothering your mind concerning what we have discussed now, please drop your questions in the comment section, and I will look into it. If it is to create a new content concerning it, to clarify issues, I will do it. All right, guys. And one more thing, if you haven't joined our free Telegram channel, please do so, because we post regularly high probability trade setups on our Telegram channel. It is completely free. Just join it immediately. And if you haven't subscribed to our YouTube channel, please do so just immediately and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. All right, guys, I see you in our next educational video.